All right, let me present my screen here. All right, so if you're new here, we always break down stock charts just to go over it again, just to give everybody a reminder on what we're looking at. And it's going to be special today that you pay attention to the chart and actually understand the different parts of the chart. Because when I walk you through this Tesla play, um, it's a little complex, but if you can follow along with me, then there's definitely some money in this Tesla play. But you'll definitely have to understand charting. All right, so let's break this down. So this is stockcharts.com. Of course, it is free. I like using free websites. I've been using it for years and haven't paid for it, but you can sign up if you want to. And it has two periods. You have daily and you have weekly. It defaults to daily. And the way that you find stocks is just by typing the stock ticker or name in the search bar. And once you type it in the search bar, it's going to produce a chart that looks like this. And you can read the information off of it to make a prediction on the stock that you're looking at. So, all right, we're looking at the SPY. We're looking at it on the daily. The RSI chart is at the top, and all of the titles are top left-hand corner. So this is title, so on and so forth. So this chart up here, again, this is the RSI. 70 means that the stock is overbought, means that people are buying it too much and too fast. And down at 30 is underbought. So 70 is overbought, 30 is underbought, and 50 is right in the middle. I like to go for stocks that are in between 45 to 55 on the RSI, and I like it to be pointing up. So just like this would be in my strike range. So this is between 45 and 55 at 51, and it's pointing up with upward momentum. So this is actually a perfect example. But this is the RSI again. If it's touching 70, it's overbought. Touching 30, it's oversold. 45 to 55 is the easiest way to get started using this chart. Get in around those ranges, and then you can pick to get out at about 60 to 70. Do I have any questions about the RSI? All right. On to the rest of the chart. All right. So this is your main chart, or what I call the main chart. And before we get into the main chart, I would like to go ahead and separate volume. So I'll go down to volume and the chart attributes. Go ahead and separate that. That way it puts volume down below and it's not behind the chart. All right. So let's start with the candlesticks first. The candlesticks are these rectangular objects that are on the chart. So the white are up candles, red are down candles, black is slightly down, white with a red outline is slightly up. The main thing to focus on is just white and black candles. Those candles are telling you if the stock is going up or down. And if they're back to back, you won't see, for instance, we have these white candles that are back to back, and you can see that they're going up. If you have down candles back to back, they're going to be going down. So again, down is red, white is up as far as candles. Another thing that a lot of people that analyze charts forget to mention is that if it's a up candle, that means that it opens at the bottom and it closes at the top. Now, what does that mean? So that means that, all right, this candle right here, the bottom of it touched the 50-day moving average. The 50-day moving average is this price right here. So it's 402.17. So let's say that the candle opened up at 402.17 or around 402.17, and then it went up to 406. So what that means is that the candle opened up at the bottom at 402 and it went up to 406.60. So that's how you read an up candle. So when you see these long candles, that means that it touched 390 and then it went up and it closed up here. Now, when you're looking at the down candles, they're the exact opposite. So that means that the candle opened up here and it closed here. Why is that? Well, it's because if it's a candle that's going down, it's going to open right here and it's being pulled down, and it stopped being pulled down right here. So when you look at this candle, same thing. It opened up right here, then it got pulled down and it closed right there. So again, when you're looking at the up candles, they're the opposite. The up candles are working normal. They open at the bottom, close at the top. Do I have any questions about candles? Give it a second. All right, a second has passed. All right, we're good. All right, so that's how you read candles on the chart. All right, the next thing, let's look at the MAs. So if you look at the MAs, these MAs stands for moving average. Your moving average is just the last whatever period you put in this. So for instance, this blue line that says MA50 is your 50-day moving average. Why is it 50 days? Well, we're looking at the daily time period. So that means that on the daily time period, each candle represents 1 day, regardless if it's an up candle or a down candle or a black candle or a white candle that's with red outline. It doesn't matter. Each candle represents 1 day because we're on the daily time period. Now, when you're looking at the moving average for 50 days, your MA50, that's the average stock price over the last 50 days. So the average stock price for the SPY over the last 50 days is 402.17, and it's notated right here in the blue. The MA200 is the exact same thing, but it's just taking into account more days. So if this is taking 50 days, this is taking 200. And we can see that that 200 moving, that 200-day moving average is a bit of a stricter line, it's a straighter line, because it's taking into account more days at a time. This one is more flexible because it's only taking into account 50 days. The way that you use this is that people take anytime a stock gets, especially the 50-day moving average, when a stock crosses this 50-day moving average, a lot of people like to use that as a sign to buy in and that the stock has upward momentum. So for instance, the stock right here, it crossed over its 50-day moving average, pulled back a little bit. And once it pulled back, it touched its 50-day moving average and bounced off, because a lot of people, again, used it as a signal like, hey, it's above its 50-day moving average. It's doing better than it has been in the last 50 days. Let me go ahead and buy. And then they bought it up. You can see three days in a row of up candles after it touched the 50-day moving average. So now we have this where our last candle, it touched the 50-day moving average and it's going up. So we may get another up candle. I mean, a down candle is possible, but it's looking like it's going to be another up candle. But that's what people use the moving averages for. And then we can look at this one at the 200. Once the stock got up to the 200, it touched it and then it came back down. Again, I told you that that 200 moving day average is a bit of a stricter line. It's going to take more to get through it. It's not just going to break through it just like the 50-day moving average. For instance, the 50-day moving average, you broke through, came down, went up, broke through below, and then finally came back up. This one, we only touched this one time since we touched it back here. And even back here, we had an issue with it at that 200-day moving average. So that's how you look at the moving averages, and that's how you use them to help make trades. Because again, you can use them as your support and resistance. And for those that don't know what a support and resistance is, let me annotate. So when you're thinking about a support, your support is your floor. Just think about it as the table that's holding up your laptop or your computer. That is your floor, my bad. So you want to have a floor and a ceiling for the stock to identify your trade range so you can know what's possible. For instance, if we look at this stock right now, it's at 406.60. We shouldn't be saying, okay, this can go up to 500 when we don't have any range lines drawn. So to keep yourself in the realm of realism, you want to go ahead and make sure you have some ranges drawn. So for this one, we got 406.60. We can look at resistance. We see that this line right here at 400 is going to be the support. This is going to be our floor because it's underneath 406.60. You can't have a floor that's above the current stock price. So this floor, the support that's underneath, means that if the stock comes down, it can bounce or it can break through at that floor. It has to do something at that floor. The reason why I picked 400 as the floor is because you want to have 3 touches of that stock price and then a change in direction. So we have a touch right here, change, a touch right here, a change. This one actually broke through. It sat on it. It came back up. It touched it right here, changed, broke through, touches again. So that's way more than 3 touches, and it changed direction. So 400 is a choke point right now for the floor. So again, if it falls down from 406.60, it's going to check in around 400. It might check in at 402 because that's a 50-day moving average. But again, we still want to identify that floor. All right, so let's move on to the ceiling. If we look at a ceiling, we can be conservative and put a ceiling right here at 410. Same reason. Look at how many times it crossed 410 and then it changed direction. So it crossed, changed, crossed, change. Just right there is already 3 touches. And then we had the same thing happen right here. And then it came down, touch, change, and then finally broke through right here. So this is our range for the short term. This is not a long-term range. If you want to do a longer term range, you can put it right here at 420, but it's still gonna have a hang up at that 410. So that's why I picked 410. Now that we have a trade range, we know what's possible in the short to mid term. So now that we have a trade range drawn, we can say the support is at 400. This is the floor. The resistance, which is the ceiling, is at 410. So what happens at the ceiling? So if this stock goes from 406 to 410, I'm not saying that it's going to stop at 410. It can blow right past 410, but there's a high probability that it's going to check in at 410 some way. Again, it did it right here, 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 and here. So I'm pretty sure we can stretch the chart back even further. It checked in multiple times at 410. So do I have any questions about how to draw your support and resistance line? Isaac?
Yeah, I just have a question about okay, so you said those 3 lines going up. So when you see all those days of down and you see those going up, is there a point where it bounces off a resistance where you say, okay, I want to buy a call or something?
Yeah. So what I would do, for instance, here, if you didn't want to take the risk, the stock is at 406.60, the resistance is at 410. If you didn't want to take the risk of it going from 406 to 410, you could wait and set a buy order at, let's say, 411 or 412, just to make sure that it locks above 410.
Mm-hmm.
And once it gets above 410, that ceiling is now going to become a floor. And then that's when we're looking at 410 to 420 now that is locked in above. We have to confirm that floor for 410.
Okay.
That help?
Yeah.
All right, cool. All right, any other questions about support or resistance lines? Again, this is going to be important for what I'm going to show you all later.
I mean, there are many reversal points where you can draw the support and resistance. So what is the criteria? Okay, this is the most probable support and resistance. There are many turning points in the chart itself. So when you draw a horizontal line, so what are the rules one should follow while drawing a support resistance? Otherwise, you can draw the support resistance anywhere where the point is turning. This is my question. Thank you.
Good question. So technically, you want to have 3 touches and change in a change of direction. So for instance, you couldn't draw let's say if the rest of this side of the chart was blank, and we only had this peak right here at 430 where it touched it one time. I wouldn't call 430 a resistance line because it only touched it one time and changed directions. That's not enough. Again, you want at least 3. And when you're going to pick that resistance or support line, you're going to see a cluster. That's going to tell you where the actual support and resistance is. Because again, it's a cluster right, and it's not a coincidence. If you look at it, it's a cluster right here. For some reason, it bounced off the 50-day moving average, and then it checked in right here. It traded sideways, and then it moved higher. Same thing happened right here. About a month and a half before that, same price point, checked in. And then before that, same price point, it was dropping down, checked in. So 3 or more touches, if it touches it and changes direction just one time, that's not a support or resistance. You want at least 3 to be able to confirm it. And again, you'll know you have a good one because you'll see way more than 3. Like this is here, 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 and here. That's way more than 3. Does that answer the question for you, Kumar?
I mean to say, when you say 3 touch points, so these 3 touch points should be very close by, or where you put the cursor, where it is changing directions very close by. So it's not exactly the changing the direction. It's just flirting with the across. I mean, around the line itself. It's going up and again going down, again going up, again going down. The closing close by points I'm talking about. If you
Right. So
find the touch points, the quite distant one, then what is the criteria? How much period should be there between 2 touch points that should be considered? This is the confusion.
okay, so yeah, if you're looking at it, let's say we'll look at it 5 days at a time, right? Because 5 days is your basic trade week. So at 5 days at a time, if you have a cluster of ups and downs, again, these are all chain, like this choke point right here. These are all consecutive days back to back. Up, it cleared it, went below it, cleared it, went below it, cleared it, went below it. It's flirting around that line. So again, to identify the choke points, because again, you're using these points to say, okay, this is where I'm going to get out, or this is where I'm going to get in at. And again, it's a reason why it's happening. My alarm. It's a reason why it's happening around these price points. So again, this ceiling will become a new floor once you pass it. So if you're looking at it again in a 5-day or let's say 10-day pack, you're going to see that it's going to be jumping around. If it just blows right past a price point, give me a price point. So if it's just blowing right past a price point like this area right here, then you might not want to go ahead and say, all right, this is my resistance or this is my support. You want to clear resistance and clear support. For instance, all of these are consecutive back to back, and it just hung around that line. Months later, or a month and a half later, it hung around that line again, and then it still changed directions. So we have a down candle right here, and then we have an up candle right here, another up candle, and then a down candle. So it's bouncing in between support and resistance. And again, the support and resistance can be tight, so it can be hard to identify sometimes. But again, if you look at it in clusters, again, you only need 3. That's in, again, I would give it 5-day time period, but you're going to see clusters if you're right, especially for a volatile stock to where the stock price is moving up and down. You're going to see it all over this chart.
So again, a connecting question. So when you draw these lines and you find a cluster, so you connect the closing part or the highs, or this line is just running through the middle of these candles. Like, what is the criteria to draw the line? Like, it should be the open price or close price or high or low. How do you draw across the cluster?
No, you're drawing the line at price points. So for instance, if I draw this line at 410, that lets me know that points below or above 410, I need to be taking action. So if I got in at 400 and it's starting to, and the stock is getting really close to 410, I need to say, okay, do I want to stay in? Because I know that something happens at 410. Either we're going to bounce off and reject, or we're going to break through and keep going. So now I know that it's basically a signal to let you know that you have to make a decision. And again, you're picking it at price points. So when you pick at this price point, again, it's flirting around 410. So it's a little bit above, a little bit below. It's not going to be like spot on the money every time. Again, you look at this cluster, a little bit above, a little bit below. But you know for sure, once you get close to 410, you're going to have to do something. You're either going to buy in if you haven't jumped in yet and you're waiting, or you're going to go ahead and take profit once you get close, because you know that that's a ceiling for you.
So thank you for the clarification. But again, I have seen certain people who use the word, not the support and resistance level, they call it a zone. As you are mentioning, it's not a specific price level. That can be quite subjective. So is it a zone? Is there any criteria within this bandwidth? I mean, plus or minus, though it depends on the volatility of the stock also. But again, when some people have seen, they use the word support and resistance zone, not the level. They say the level is not very sacrosanct. So is there any criteria to identify this zone part?
Yeah. So if I'm getting your question correct, we have identified our trade range or zone right here. So again, you have a floor and you have a ceiling. So you know what's realistic within this floor and ceiling. And again, your support and resistance is just letting you know where you need to get in or get out at.
I'm not talking about the zone between the support and resistance. Like suppose wherever you drawn the like 410, the support or resistance line. So instead of a line, though the line has to be drawn, but that line specific is not considered as the support or the resistance, but the small area around that line, they call it a zone. Like this is the resistance zone or a supply zone, or some people call it demand zone and supply zone. So they say that don't consider this as a very specific level, particular price point, slightly above and slightly below this zone acts as a support and resistance. So
Okay, so
so I mean, I want to know, okay, which is the right way? It should be a particular price level that one should try to identify, or a small zone sort of a thing around the support line or the resistance line can be considered. Thank you.
good question. So yeah, so you can have a zone. A lot of people like to use 5 points below or above their identified resistance or support. So you can have a zone around that price point. So again, you can have 5 points above or 5 points below, which is you can do percentages, 5% above, 5% below if you're doing options, 5% above, 5% below if you're doing options. Again, using this support or resistance line. So again, this is to identify where you need to take action. And again, you can have a zone. Again, this is not, when you draw a resistance line, it's not saying that the stock is going to go from 406.60 and hit 410 on the dot and then change directions. It's approaching that. And then when you're drawing the floor at 400, it might dip down to, let's say 398, and then it may turn around and bounce at 398. It's not going to be perfect, but again, you can set it, and then you can say, okay, getting close to it or a little bit above it. That's why I said right here, once you get above 410, you don't have to get in as soon as the stock reaches 410, because it may reject at 410, or it may go up to 412 and then reject and come right back down into this trade range. That's why I said you can set it to, you can wait until it locks above 410, and let's say it starts moving up to 413, 414. That can be your entry at that point. Someone else have a question?
Got it. Thank you very much. Thank you.
All right, you're welcome.
Yeah, I just
Isaac?
have one. Yeah, I have one question. Before you drew that 400 line, like last week, I had it at 390. Is that the closest one, or did you have another one?
You had it right here.
I had it at 390, and then it went all the way down, and then it bounced. But I don't know. Do you think that's a good line, or is there another one?
Yeah, 390. Again, you can be as conservative as you need to be. You just want to have a lot of check-in points on your way down, just to protect you. For instance, you can have 400, 390. You can have 380 if it lines up. I haven't drew it, but 390 is definitely a good one. But again, right now it's at 406. I picked 400 because, again, I said I was being conservative. You can pull it back and say 390, but it's already at 406 and it's moving and it's trending up. It's probably not, and then it has that support of that 50-day moving average underneath it. So it's probably not going to drop all the way down to 390 again, unless, again, Jerome Powell comes in and do his thing. But as long as Jerome Powell is not like crashing the market, then the natural flow of things is going to be hard for it to pull all the way back down to 390 in the short term. So
right,
that's why I picked.
But as it pushes through that 400, do you then now say I need lower support? Because as the week went by, I was watching it and it kept going lower and lower. So I said, okay, well, maybe it'll stop at 390. So I drew that as support because I didn't necessarily see the 400, but you see what I'm saying? Like, as far as I'm thinking, I need to move my lines if it busts through a point. Is that the right way to look at it? Okay.
And actually, you don't even need to move it. You can just treat, for instance, when you drew that 390 right here, where did you put your ceiling at? Did you put it at 400? Where did you put the resistance at?
I probably was all the way at 410, from 390 to 410.
Okay. So if you put it at 410, if you put the floor at 390 and you put this at 410, you can do it again, but that's a $20 swing, right?
Okay.
So you can have it check in. That's why I picked 400 because again, it's conservative. And once it pulls back, it's going to check in at that 400 because we got a couple of bounces at 400. And then it'll just, so from this 390, if this is your support, once it breaks through 400, that 400, which was a previous resistance, is now a support. And so on and so forth. So for instance, tomorrow when the market opens, if this goes up to, let's say 413, and it breaks through this 410, this 410, that's your resistance, that's your ceiling, is now going to become your floor.
Oh, I see what you're saying. Yeah, the problem was I was all the way, to be honest with you, mine was all the way at 380, and it turned around, and I realized I should have put it at 390. I think my span was way too big. You see what I'm saying? Like I was all the way probably 380 to 410, but I didn't even see the 390. So
yeah, it was too. That's why I said it's better to be conservative, and then you can draw different supports. Like you can have two supports. You can have a support at 400 and a support at 390 if you want to. But again, I like to keep mine conservative, and as it moves, I will move it. I will shift my chart up or down depending on where I need to move, so I can be more precise.
Okay, thank you.
All right, you're welcome. All right, any other questions about support, resistance, candles, you name it? All right, cool. So we covered this. Let's move on to the last two pieces, which is, these are probably the easiest pieces. This is the volume chart. So on volume, again, this is just telling you how many trades are happening on any given day. Each bar represents a day. And the colors are telling you if it's buying volume or selling volume. Red is selling volume. Black is buying volume. So we have 3 days of buying volume. And we have, again, remember, each candlestick represents a day. We have 3 days in a row that the stock is moving up because the volume, the buying volume is going up. Now, that's volume. Again, pretty simple. When we move to the MACD is your moving average convergence divergence. Again, this is just a relationship between the two lines and how they converge or diverge, come together or separate apart. And if you're looking at this black line, just like on the volume chart, this black line represents buying pressure. So this is pressure, this is volume, this is pressure. So black is buying pressure, red is selling pressure. So when the selling pressure is on top, the stock is going to be pressured to drop because people are pressured to sell the stock. And then when you look at the volume, we have a lot of selling volume over that time period as well. And then when we look on the chart, we see that we have days of selling back to back. We had a day of buying right here, but majority for the trend is going to be selling, is going to be going down. So we have red on top. Now, when black is on top, we see that the stock is going to trend up. For this period right here, where black crossed over and black was on top, black took over back here, and it trended all the way up until it had a crossover around in this area to where it started to decline. Now, we have black getting really close to crossing over. With these 3 days of buying happening consecutively, that's a really strong indicator that we're probably going to have another day of buying. Again, once this MACD crosses over, so we have this buying crossing underneath and get on top of the buying pressure, that means that we're going to be in the uptrend again. And we're already starting the uptrend right now, but this is going to confirm the uptrend once we get a crossover on top of the selling pressure. So that means that the buying pressure will be on top. And once the crossover actually happens, we should get another pump up. So it may put us around the 420, but I'll cover this stock, in detail in just a second. But again, we're getting close to a MACD crossover. And if you're new to watching the MACD, just watch the MACD this week and see what happens. Because if we get a crossover, I promise you, we're going to be above 410, possibly at 420, if we can get this MACD to cross over. Do I have any questions about volume or the MACD? All right, cool. Let me stop presenting, and I'm going to go ahead and hand it over to Mark to cover his pattern of the week.
Appreciate that, Ladarius. Give me 1 second to share my screen. All right. One thing I wanted to note about what Ladarius was talking about with the support resistance line, and this is really for Isaac. When it's safe, especially with the S&P 500, or when you're trading the SPY, you can have the ranges at $10 increments. Okay, so you can it's safe to say anytime you see the stock price, let's for instance, it's at 406 now. A good trading range for this is going to be a support line at 400 and then a resistance line at 410. And you can see that throughout the entire graph. Anytime it goes up right here, let's say it was at 430, you can see if we draw, give me a second to annotate. If we just go down the line, so we can draw a support, we can draw the resistance line when it was at 430. We can draw a resistance line right here. You can see you have areas where it was making this a clean resistance line, where we have touches, it passed around, even going up, it was doing the same thing. And then when we shoot down another $10, we can make the support at 420, and we see we have a lot of trading activity happening in that area. So that's just a trick or a tip with the S&P, with the SPY, you can always just make your support and resistance line $10. Because as you're going down $10 increments, they always check in at those prices.
Okay.
And the more you trade it, the more you watch the SPY, you'll see that forming. Because a lot of times with the S&P 500, I don't have to really like make a support and resistance line. I just know if it's at 406, all right, my support is going to be at 410, and my my support will be at 400, and my resistance will be at 410. And you could play it off of that. But that's just one little trick for that one.
Right. Thank you.
All right, so let's get into the pattern of the week. This week, the pattern of the week is going to be fairly simple. It's probably going to only take about 5 or 10 minutes, but I know that Ladarius has a lot to cover with Tesla. So after I finish the pattern of the week, I'll see if anybody have any stocks that they want to look over. And if y'all do, we can look over them. And if y'all don't, then I'll just talk about my stock picks of the week, and then I'll hand it back off to Ladarius so he can close this out. But let's just get started. Again, the pattern of the week is the bullish engulfing pattern. And this pattern is basically used to determine trend reversals, as well as, because it's the bullish version, if you're doing a put, this can open up entry point, or excuse me, you're doing a put, this can open up good exit points for you to take profit. Or if you're looking to get into a call option, this can provide you with a good entry point when you see this pattern form. And it forms with just 2 candlesticks. Okay, it only takes 2 candlesticks to form this pattern. The first rule, however, the stock needs to be in the downtrend. So the stock needs to be going from a high price to a low price. And then you'll see a red candlestick form. And then that next candlestick after that red candlestick, or the black candlestick, after you see that form, you're going to want a bullish candlestick, a green candlestick, or a white candlestick in this case. You're going to want a white candlestick to form. And when it forms, you want the body of that candlestick, as Ladarius was talking about, the opening price and the closing price, to engulf the actual body of the bearish candle, this black candle. Okay, so again, we have it here for the bearish candle. The price opened at a high level, it closed at a low, creating this red candlestick, or in this case, a black candlestick. And then the next candlestick, the price opened below where the previous price closed at, right? So you have it here, the price is opening down at the bottom and is under the closing price right here that we have. And then when this day close, or when this candlestick closes, the stock price is going to be higher than the body of the previous candlestick, the opening price of that previous candlestick. And that's forming an engulfing pattern. So just look at it as if you're playing Pac-Man, for instance. The dots that Pac-Man eat are smaller than his body, and he engulfs the entire thing. So you can look at it like that. Like this candlestick will engulf this entire body inside of its own body, as you can see here. Good. Does that make sense? Do I have any questions? Okay, good. All right, so here are some rules for the bullish engulfing pattern. Again, it's a fairly simple pattern to grasp. The first rule that I always like to use is the prior trend. So you want to see the stock price going in the downtrend. So the price was once above, and then it's going to slowly go decrease in value, creating the downtrend. And once that downtrend happens, if you see the bullish, or if you see that next candlestick open up as a green candlestick, it's potentially going to be a bullish pattern, and you can see that the stock price is going to go up in value from that. That'll make a good entry point after that. But again, the breakout after the second panel closes, the next day you want to see that stock price go up in value, and that's going to indicate that, hey, the bullish engulfing pattern actually completed, and this is a good place to get into the stock price, or get into the your trade. And here's an example of the bullish engulfing pattern happening on the S&P 500, and this happened last week. So as you can see right here, this stock and then this closing is not as, this engulfing of the bottom of this candlestick isn't as big as, or it isn't as known or shown as it normally is, but this is still an engulfing pattern. You see we have the stock price trending in the downtrend. It created this red candlestick, and then the next candlestick was a white candlestick, and that white candlestick did open below this previous red candlestick. It was very small, but it still opened below, and the entire candlestick, this entire white candlestick, engulfed the body of this red candlestick, making that a bullish engulfing pattern. And again, that just indicates that this is the bottom of the stock price, and it's about to turn around and trend in the upwards direction. And we have that that acceptance, or we have that acceptance right here, as we can see with this stock, with this next candlestick. It was also a white candlestick, letting you know, like, hey, this bullish engulfing pattern actually worked, and it completed itself, and you can start trading. You could have started trading here. Yeah, I have a question.
Yeah. So, okay, so you see how the RSI is pointing up, but the MACD, the black line, has not crossed over. That's what I'll be getting like a little bit of hesitation about. The MACD is not showing that it crossed over the red line yet, but the MACD, I mean the RSI, is pointing in an upward trend.
Yeah.
So should I wait for some more confirmation on this, or what?
So with this one, I think the next thing that's going to happen is it's going to go in again, like they said, this resistance line is going to check in at 410. And at 410, if it breaks above 410, then you're going to see it go up to 420. It depends on how long you want to wait for the trade, and exactly how you're trying to trade. Like if you're doing a long-term trade, or you're going to hold it for a relatively long time, this could be a good opportunity to get in. Again, with this MACD crossover that's about to happen, it's a reason why it has to form like this, right? So it has to start having buying pressure in order for this black line to start going up.
Okay.
That's what you're seeing here with that RSI level. That's all indicating, these are all bullish indicators. Like even though this hasn't crossed over yet, that potential can really skyrocket this. So if tomorrow, if we see a green day of trading, this is going to be closer to crossing over, and that's going to cause this stock price to not only check in right here, but it's probably going to blow right past it.
Okay,
And
so since the black line and the red line is separate, so that means that it's a lot of momentum and buying pressure. Is that what you're saying? Because the MACD is looking like it's about to cross it. That means that it's a lot of buying pressure there.
Yeah, so it's trying to, it's looking like it's going to cross over. The selling pressure is still above it, so it's still more selling pressure than buying pressure, but it's looking like the momentum from the bottom, it bottomed out right here, and it's going to start to trade upwards. Yeah, so it's looking like it's going to potentially have more buying pressure than selling pressure this next week.
Okay.
And that's going to cause it to turn around.
Okay.
Now we could also just have a price rejection here. Once we get to this 410 level, we can see the buying pressure get close to this red line, to the selling pressure, and it rejected and continue to trade downwards. But from the way it's looking, again, it's going to test that 410, and it's probably going to break above it and shoot upwards. That's what it's looking like.
Okay, thank you.
Yes, you're welcome. Do I have any other questions? All right. So if you wanted a deeper dive into the bullish engulfing pattern, you can always go to investopedia.com. Just type in the bullish engulfing pattern, and you'll find the article, and they'll teach you about, you know, the origins of this pattern and who created it and the success rate of it. And that's all I have for the pattern of the week. So does anyone have any stocks that they wanted to go over today?
Please share some resource as you may share this Investopedia link about the support resistance lines also, like how to draw accurately, as dear sir mentioned, okay, about the 3 points, 3 touching points. So is there any good resource, online resource that you can suggest for support and resistance also?
Investopedia.com, you can probably type in support and resistance line on investopedia.com, and they'll give you a method of how they like to find resistance and support lines. But for me personally, I just use the 3 points. I find 3 active points, and I create my support and resistance line from that.
Okay, got it. Thank you, sir.
Yeah, no problem. And trial and error as well, Kumar. The more you draw support and resistance lines, you'll be able to determine what's the best method for you. Because I know you talked about zones earlier. I use that from time to time, especially like if I get into once I start looking at the minute charts. The way I like to use zones is I like to go on a larger time frame, maybe like the hour chart. I like to use candlesticks from there and draw a zone from that candlestick and then trade in that zone on the minute chart. I know that's maybe kind of confusing, but that's a little bit more advanced method of trading the zones and stuff. Isaac, you had a question? Yeah, the stock to
I have 2 that I wanted to look at, which was Microsoft and Target. And then I wanted to ask you if during the week I needed help with like I wanted you to help me chart one of these, like instead of me charting it. Is there a better way? Is there a good way? Like, do I DM you, or how do you go about that?
Yeah, you can DM me, or you can schedule a meeting with me. I'm not sure. I might have to update my schedule because I know my schedule model was at one point Tuesday and Thursdays after like 6. But you can always just DM me or shoot me a message. You can just shoot a message in the shoot a message in the stock chart, the stock chat. Because if I don't see it, Ladarius may see it, and he'll be able to call me and let me know. Because sometimes I get a little busy with work. But you can definitely just shoot a message in the stock chart, and I'll definitely be able to help you for sure. Anytime, it doesn't matter.
All right.
So we're gonna first start off. You said you wanted to look at Microsoft and Netflix.
No, and Microsoft and Target.
And
both of them, I was thinking about getting options on them. They seem like they may be headed like in the other direction, but I just want to see what you thought about that.
Okay, yeah, definitely. Maureen, you had a question?
It was just the MRO. Look at that stock after you finish with when you finish with Isaac.
Okay, that's perfect, because I wanted to talk about energy stocks, and I definitely look at that one for you. Okay. All right, so let's look at Microsoft. Let's draw some support and resistance lines. Off the rip, the price is at 264, so I can see a support line at 250. Again, we have a lot of action. This is on the weekly chart. We have a lot of action in this period. As far as the weekly, we have touches right here. It touched it, went under it, touched it again, and it shot up. And then also right here, we have a lot of consolidation this year at this area. Okay, now if I'm being conservative, at 264, my resistance line, I would have it at 270. So a $20 increase. That's because, again, this consolidation period, we have a lot of touches. We have touches here, here, here. Even when it wasn't consolidating in this period, we have touches in this area. The price went down here. Once it touched there, it rejected and started to go up. Same thing on this candle. The candlestick opened at this bottom. The price shot all the way down to 270. Once it touched this resistance area, it shot back up and closed as a bullish candle. The same thing right here. Once it got close, touched, We have touches right here. It touched and then rejected it. Touch, reject, touch, reject. So this is a good area for a resistance line for right now. And what I'm looking at now is, or the RSI is sitting at 46. So that's in the sweet, and it's trading upwards. So that's a sweet range potentially for a swing trade, or a bullish trade if you wanted to do a bullish trade on it. But however, we have this MACD crossover that we see is happening. If this MACD crossover was to complete, and we have buying pressure, the red line above the selling pressure, the selling pressure above the buying pressure, we know that that's going to cause the stock price to drop down in price. And if it was to do that, and it potentially broke under our support line we have drawn here, my next support area would be at this 240 range. Okay, so I will make my next one at 240, so $10 less. It just works out that way with this stock because we have touches in this area. It touched here, rejected it. Once it got back to this area, it went above, and it came back down and tested this area again. And when it tested it the third time, it shot back up. So we have good touches in this area. Even this one little candlestick right here, right? It got down to 240 and it shot back up. So that's my next support area. So if my stock price was to shoot down under 250, my next support area would be 240. So what's that saying is, if you wanted to do a put on this, because you say you think it may be going bearish, if you wanted to do a put on this, I would wait to see if it broke under 250. If it breaks under 250, or if I get a good MACD crossover, my strike price on my put option would be about 245, just to give myself some wiggle room. But I'm really looking to get out around 240. If it doesn't get close to 240, I'll just take whatever profits I made off of my call, my put option that I have.
Now the thing is yeah. Now see, that's the weekly. So that's saying if I want to buy a call weeks out, maybe no, yeah. I'm actually wanting to buy a call maybe even a month out. Mm-hmm. Yeah. The problem is I see the weekly doing that, but the daily looks like the MACD is going the other direction, but I should be listening to the weekly, right? Because I want to buy a call maybe a month out or so.
Yeah. You want to do all your like your target prices and stuff on the weekly.
Okay.
But when you get into the trade, you want to find the best time to get into that trade off of the daily. So the way that you would do this is, after you figure this out, again, we said if it was to go down, we're going to make a strike price at like 245, 240. We'll just call it 240 just because that's the support line that we have drawn, the next one, right? So that's our strike price. Now, when you go to the daily, what you're doing is you're looking for the best place to get into that trade. Okay, that's all you're doing. You're trying to find the best opportunity to get into that trade, because after you chart this, you know that the stock price is going to potentially get to 240. We know it's going to be in the downtrend. So you're going to get on that daily chart, and that's going to allow you to find the best entry point for you. Okay, because now what may happen is this, before it actually dips down to 240, it may test this this resistance line, and that may be what's happening on the daily, right? You say it looks like
the daily MACD is the opposite of that, and it looks like, so for the next few days, it's might be good to get for it's going to be going up. But I think I flipped the charts around, because I was thinking to buy a call, but I probably was looking at the daily. But then that's where I was getting a little confused, because when the daily doesn't match the weekly, I didn't really know which one to listen to. But that's some good clarification. Yeah.
And we're gonna look at the daily too, Isaac. But what that daily is probably saying is, okay, on the weekly chart, what the daily is telling you probably is that, okay, if I go look back on the weekly chart a week from now, that daily bullish, what is probably going to happen is it's probably just going to go up and test this 270 line. It may get up a little bit above it, but it's probably going to test that resistance area and then try to reject itself from there and start to trend downwards.
Okay.
That's what's probably going to be happening. And it looks like it's kind of, in a way, forming a, it looks like it may be forming a head and shoulders pattern here. Okay. So we have this, went up, went down, tested that resistance area. Tested the support, went up, broke past our neckline of our head and shoulders. Then it went all the way down in value, and then it's going back up, right? So it may, It may go up a little bit more or it may pull back, but it looks like it's probably going to test that 270 line again and then shoot down. If it shoots down, it's going to break down to 250, and then if it breaks 250, it's going to go to 240. That's what we're looking at. It looks like it's going to potentially make a head and shoulders pattern. That's what we're looking at on the weekly as well. All right, so let's look at the daily. All right. So yeah, on the daily, looks like it's doing the cup and handle. All right, potential cup and handle forming. And then, yeah, like you said, that MACD, that crossover, it looks like it's about to try to happen in the upside. Now, with that crossover, it may not be a super, like, huge crossover where it shoots it up to 280, but it's probably going to go and test that 50-day moving average that we have. Let me zoom in a little bit. I'm sorry. It's probably going to go and test that 50-day moving average right here that we have. And that's also a good area to make a resistance line. So on the daily, I'm making my resistance line at 270. You can call it 270, 269. The 50-day moving average is probably going to test that. And on the for the support line, I would make it 255. 255 looks like a good area. Again, it touched here, shot up, went down, tested it again, went back up, tested our resistance line, shot down. It broke under the support line. When it did break under it, it went up to retest it, bounced off of it, went up, broke off, so forth and so forth. It just kept consolidating that period, and now we're right here. And again, on the on the daily chart, it created. It's trading just like the S&P 500. It looks like created this head and shoulders, completed it. It actually went all the way back down, and now it's shooting back up. What I really think is going to happen again is going to probably test this 50-day this resistance line here, and once it touches here, this is a good area to see exactly what's going to happen next. Okay, so once it gets to this 269, 270 range, wait to see if it breaks above it. Because if it breaks above it, then you know you're still bullish. It's still going to be bullish. And then what's that going to do is that's going to change the way that you look at your weekly chart as well. So like they were saying, moving those resistance lines and stuff, that's all you would do. You'll just move those resistance lines and those resistance areas. Because on the weekly, it's still looking like it's bearish, but you'll just change it up a little bit.
Okay.
Did that clarify for you, Microsoft? Is that good for you?
Yeah, definitely. I canceled my call I was gonna buy Monday.
Okay. What way did you have your strike price at?
I'd have to look. It might have been like 280, and I had it like a month out. But if it's going the the other direction, I don't want to get that anymore.
Yeah. Definitely. All right. So the next one you said was Target.
Well, just Target, yeah.
All right. So let's start out drawing some, again, support and resistance lines. All right. Or we see the RSI is at 48, close to being neutral, and it's trading upwards. We had a MACD crossover that happened, and the buying pressure is above the selling pressure. It has a little gap, not a huge gap, but that is still bullish. My support line would be at this 160 level. Again, because that's the most recent price action we have, as well as we in the past it tested it right here. So my support line is at 160, and the next area that is probably going to go ahead and test is around 180 or 190. It depends on how conservative you want to be or how aggressive you want to be. If you want to be super aggressive, you can make it 190. If you want to be a little bit more conservative, you can make it 180 for your support, for your resistance lines, excuse me. We have potentially this could be forming a double top, which is bearish, but we don't know, or it could be a bullish flat. So it is, still up in the air for that. If it is a double top, we know it's gonna probably, it may go, and let me move this resistance line. It may have it to where it goes up and tests 180 before it pulls back down, because again, we have this candlestick, it shot up to 180, and we can see that was where the rejection for this price was. Once the stock price, because it opened up high and it started trading upwards, once it touched 180, the price shot down. So that may be our resistance line for this double top. And if that is, then we may see the stock price go up to 180 and then start to trend downwards in price. But it also could be making a bullish flag. And if it was making a bullish flag, again, from, we'll say that's 150 to about 170 is our flagpole length, and that's going to be a $20 increase in price. So once this breaks out, if it breaks out at 170, then you're going to potentially see this get up to 190. So this can still go two ways. So you just have to watch the market and see what happens with this one. As far as on the weekly, let's look at the
So on the weekly, I was putting in a 190 call all the way out to 1021. At what point would you decide on either the 180 or the 190 call if I were going to do it?
Yeah, so if you were going to do that, you want to look on tomorrow when the stock market opens, and we're going to look on the daily and see what's happening. But you're probably going to want to get in, because that may take about 2 or 3 weeks for it to happen. So you really just have to see what the market is doing tomorrow and decide if you want to do the 180 or the 190. But you can always do the 190. The contract will probably be a little bit cheaper. And if it does get to 180, you'll have some type of profit. And if you feel like that is the ceiling of it, and it looks like that's going to be the ceiling, you can just, however much profit you have, you can just cut your win there and just take that instead of waiting for it to get to 190.
Yeah, Target can run big sometimes, and that I've made money on them before, but lately when their earnings report came, you see that big candle, they dropped huge. So I'm trying to ride it back up.
Yeah, and I think this candle was when they when Walmart and Target they said that they wasn't gonna, they had overstock. So that's when all of that happened right there.
Yep.
And then of course with their earnings, they definitely took a dip on it. Yep. All right, let's look at the daily. All right. So on the daily, they have this MACD crossover that just happened. As you can see, that bar is above, is trading up, or it's above the neck. It's on the positive side of this axis. So that means we had a crossover that happened. It's not a huge separation yet, but that's because that was the first one. We'll have to see exactly how much separation we get with this. But let's annotate and look. So we got an RSI sitting at about 61. Again, the sweet spot normally for sales is 45 to 55, trading upwards. 61 may have some room to go. And we can try to see it from the past and see what happens. So on the past, it looks like 61 is where the height is. As you can see, it touched it and it shot off, touched it, shot off, it traded above it. So 61, it may check in on the RSI level. It may trend downwards. However, let's draw some more lines and see. All right, so we have 173, and then you can make a conservative support line at 170. And the next support line is at this 160 level. If it was to break under 170, the next support area is going to be this 160. And you'll be able to trade in that range. For the support, for the resistance, we only have one candle right now that's testing this 180 mark. But that's, however, if we probably go back a little bit and give ourselves a larger time frame to look at, and it's going to get real consolidated. But just give me a second. I hit annotate by accident. 5 years. Let me update. Okay, so now we'll be able to potentially draw more support lines for ourselves really quickly, and then we'll go back to the normal trading range. So let's just look and see. So at 180, we had that touch, and then it took a huge dip because of their, because of this is probably earnings right here. Because of their earnings, they took that huge dip. We did have a touch on the support line area right here, and when it touched it, it shot up in price, and that's at 180. And then if we go right here, we see we have price action right here in this area as well as even here. It tested this 180, shot down, broke above it, tested it in this area, shot down, and then went above it right here. So our resistance line, excuse me, I kept saying support. Our resistance line for this one would be 180. So we're still at 180 for the resistance area. Let's go back and update that. Okay. So again, let's see if it's forming any pattern that we may be able to see. All right, so this could be either making a triple bottom, as you have here, 1, 2, 3 touches, or you can call it a cup and handle pattern, right? So and I'll draw that cup for you. Or it could be making a cup and handle pattern. So the stock price may try to treat the 170. It may treat this 170 as its as the cup. So from where the price started at 170 and started trending downwards, that may be the cup area. This range may be the area of the cup, and it pulls back, or it may go up to 180 first and then pulls back off of the 180 level. And it's looking like with the MACD crossover, it probably is going to trade up to the 180 and then test that resistance line that we have at 180. If it does that, then if it does go up to 180 and test that resistance line and it shoots back, we know we're forming the handle of our cup and handle pattern. Or it would have just completed the triple bottom that I drawn out.
Okay.
Does that help you out?
Yep. Thank you.
Yep, no problem. All right, so Marathon or Marie wanted to look at MRO. All right, so we'll start with the weekly and then work our way to the daily. Okay.
So so it looked like it's forming is it forming a cup and handle on the weekly, or is that a wedge?
Yeah, so it can be forming a cup and handle pattern.
That's what I thought. I was guessing. I thought it was forming a cup and handle. I wasn't sure.
Yeah.
That's what I thought it was doing, a cup and handle.
Yeah.
Mm.
So it could be forming a cup and handle for sure.
Mm.
Yeah. And then we have this MACD crossover that's about to happen. That's definitely going to shoot it upwards. If that crossover happens, again, this is the weekly, so it may take a few weeks for that crossover to get enough momentum to go all the way up. But it's definitely probably next week we're probably going to see a crossover this week if the stock continues to trade in the upwards direction. RSI sitting at 56.65, 57, just a little bit over the sweet spot of buying it, but that's it still has room to go up. As you can see, for this half this year, it was trading above the RSI of 70. And this cool down is just this right here. So it cooled down, tested the support at, this is probably $20.50. So it tested the support at $20.50 and it's starting to trade back upwards. So and again, energy sector is still up on the year, and this is still a good sector to get into. That's why I wanted to talk about energy stocks. I had an article, and I'll post that article in there. This is just an article from an analyst talking about the stocks they're looking at for the week. They have a few medical stocks in here, but they had ExxonMobil and Enphase Energy, both energy stocks, and I thought that, I talk about energy. Darius and I both talk about energy stocks a lot, or we have been the past few weeks, that this is a good article for you guys to read. So, but yes, it's probably creating a cup and handle pattern, and with that MACD crossover that's going to happen, that's going to shoot it up so it can complete the cup phase of this cup and handle pattern. Okay, so that's on the weekly, and we can draw again. Our support line for this one would be at 20. If you wanted to be conservative, it'll be at 25. It's $25 range because we have a lot of touches in this area. This is the activity that's really conservative. The next drop is probably going to be $20.50. Okay, so right in this area, or 20, whichever you want to call it, but it's probably going to be $20.50. That's what I would make my support area, $20.50. That's the next touch area, potentially, if it was to go down.
Okay.
Support level, you got 27 is probably, if it has that MACD crossover again, it's going to blow past that 20, and it's going to go back up. It's going to try to test this $32.50 range or $30 range. It's going to go and try to test that as its support line. Oh, excuse me, it's resistance line.
Resistance line. Okay.
Yeah. And that's on the weekly.
Okay. Let's look at the daily.
Yeah.
See if we have the same support and resistance like I got. I'm gonna see what you got, what you give me.
Okay. Yeah. So off of this, I'm looking at a resistance line right now. Is going to be 27 if you want it to be conservative, 27, or you can try to make it about almost $28. Okay, you can have those two as your resistance lines. I will make it 27 because it's going to test that area, because as you can see here, we had this touch in the recent days, probably 2 or 3 weeks ago. Yeah, probably 2 weeks ago, we had a touch at 27 and they rejected it. And also we have these touches around this area that's rejected. But 27 or 28 can be a good resistance line for you. Just depends on what type of trading you want to do. But that's my resistance area. My support area would be around 25 would be a good support area for it. Okay. 25, just a little bit under 25, but 25, just to call it safe, is my support area that I would trade this stock in.
Okay.
That's would be my support area. RSI is at 60, and it can put it. I mean, it reached 70 recently. It's probably going to trend back up to 70. Once it hits 70, we're going to see it try to cool itself back down as far as the RSI. And then we have this MACD crossover that's been having rejections. It's not quite sure exactly which way it wants to go just yet. However, we do have it, and it is sitting in the upwards direction like that MACD. Yeah, that MACD is basically neck and neck towards one another. I can't tell if that's buying pressure above or selling pressure. So I'll just say they're basically, in between each other.
Okay.
And that can be shown by this tab, this 0.616 that's showing you the black line, but you don't see the red selling pressure. So they're basically right next to each other.
Okay.
So it's still not sure which way this is going to head. However, we draw some little patterns and we can see what is going to potentially happen. That's true. All right, so we have to start going up, pull back a little, shot back up, trade it down to this area, shot up. All right, so same potentially a double bottom right here, and it's testing that resistance line. So yeah, I will wait to see exactly what's going to happen. Like when the market opens Monday, if it tests this 27 resistance area, what happens? Because it's really close to testing that, and that can be make or break, especially for this MACD crossover. Mm-hmm. Depending on exactly how the market runs with Marathon or Monday will determine this MACD crossover, if it's going to be buying or selling. Mm-hmm. And that because it's so close to this 27 resistance line, if it rejects it, then we're going to see that buying pressure under the selling pressure, and it's going to pull itself down to this $25 range.
Okay, so I was thinking about doing a call, but then I decided to wait until after the CPI report come out.
Yeah,
that's what I decided to do.
Yeah, that's smart.
I was going to do it tomorrow, but I said no. I think I'm going to wait until that CPI report come out.
Yeah, that's very smart.
Yeah, I said I'm going to wait. Okay.
Yeah.
That was all I had.
Okay. So do I have Yeah, no problem at all. No problem at all. Do I have any other stocks that anyone wanted to look at? All right, let me check. Okay. So again, that was energy stocks, and most of the energy stocks are going to be doing the same thing. So I won't go over any of my energy stocks just to save time for Ladarius to talk about his picks. But I did want to, and he's going to talk about tech as well. So with Apple, I don't necessarily have to talk about Apple. It's doing the same thing that the S&P 500 is doing. So I'm just going to hand it over to Ladarius because he has a lot of information. He has a lot of good information for us this week. So I'm going to go ahead and hand it to him so he can go over his picks.
All right, I appreciate that. All right, so again, I promised y'all that I would show y'all how I conduct my research and how I set up long trade. So this is the same process that I used back in January when I turned 600 to 20K when I was trading Tesla and Ford. So bear with me. Again, you're going to see inside the mind of a madman, but it's going to make sense along the way. And it's also going to show you how much research you can do and probably should do if you're looking at making large trades. So, all right. First, I have a couple of easy picks that I found, and then we'll break down the Tesla trade. So we've been talking about Oxy for a while, and Oxy is actually pulling back from its resistance levels. So right now it's touching the 50-day moving average on the daily. The RSI is at 46 and it's curving up a little bit. And then we still have it in a downtrend here on the daily. And we moving on to the weekly. Again, it's still within that same trade range. I'm going to annotate real quick. Oxy is still within that 55. I wouldn't pick. See, again, this is only 2 touches, so I wouldn't put 75 as a resistance. You can go down to 70. You can even go down to 65, but it's already at 65, 61. So I'll keep it a little bit above that. But it's been in this trade range for, again, we're looking at the weekly. So each candle represents a week. So this is for each candle, that's 1 week. That's how long it's been in this trade range. And it's just continuing to bounce around in here. Eventually it's going to break out. The reason why I'm saying that it's going to break out to the upside is because of this article right here. So the last time we talked about Warren Buffett requesting from the SEC to be able to buy up to 50% of Oxy. At that time when he did the filing, he owned 20.2%, crossing the 20% ownership level. Right now, he owns 26.8%. So that means that Warren Buffett decided to buy a partial part of the dip. Again, he can own up to 50% of the company. And I don't see Warren Buffett asking to own 50% of a company and not doing it. So he's slowly but surely buying this company up. Again, at the beginning of the year, he started at about 11%. Right now, he's at 26.8%. So he's for sure buying this. And again, that's always bullish. This big jump right here that it made off that 200-week moving average was because of Warren Buffett and his buying. And then this right here was, again, because of Warren Buffett buying. I think he bought about 10 more percent. So he's buying in increments between 5 and 10% at a time, just being cautious. But again, he can own up to 50% of the company. If you want to read this article in detail about his new purchase, I'm going to put that in the chat. And we're going to move on. So this, again, Oxy is a longer play. This is a buy and hold. This is not an option or a day trade. Again, you could play a straddle because it's trading sideways and it's consolidating. But on the safe side, again, I'm just looking at buying and holding shares because Warren Buffett is definitely going to end up buying. We don't know what he's going to do after 50%. He asked for 50%, so he's probably going to buy up to 50. And then once he gets to 50, we got to see what's going to happen there. But I think that he's going to eventually try to buy the whole company. Isaac, you had a question. Do you think the drop in oil prices is a result of travel slowing down due to Labor Day? Will that affect Oxy? I think that the drop in oil prices may actually boost travel because it's going to make plane tickets cheaper. So will it affect Oxy? Yeah, I think it will. But again, these companies made so much money when gas went up that they're still probably going to be good for earnings report or two. So as far as the stock, again, no matter what has happened, again, we've had some crazy dips in the market again a few weeks ago with Jerome Powell and his comments, and this stock still stayed within the same range. So I don't think that investors are selling. I think that people are buying and holding, and we can tell by just looking at the chart. People aren't really trying to sell. People are selling at the highs. Once we get a jump, people sell. Once we get a jump, people sell. So people are holding on to it. All right, moving on. I told you I had some quick ones for y'all. So AMC is making so it had a falling wedge forming right here. It formed the falling wedge, and then it bounced at 8 and pulled up to 972. It has a 50-day its moving average. Its 50-day moving average is at 1034, so it's getting pretty close to that. And if we look at the volume, that's 3 days of buying in a row. We also have this MACD crossover about to happen. So it's curving up and it's getting really close to crossing over. If we can get this MACD crossover, then we can definitely get above this hump at the 50-day moving average. And again, the RSI is in the sweet spot between 45 and 55, and it's pointing up. So this one is definitely one to keep your eye on. Again, this one is based off the technicals. 45 to 55 pointing up on the RSI, checked off. Moving in the upwards momentum, checked off. Just coming off of this is a bullish pattern, so that's a falling wedge. It's bouncing out, and then we check that MACD. MACD is getting close to crossing over, and then we can check volume, and we had 3 days of buying volume. So this is one that I'm going to add to my watch list and just keep an eye on to see if it can break above this 1034 or above $10. See what happens after $10, because we'll be closer to that MACD crossover. And again, once we have that crossover, then we'll have a spike up in the share price. So that's AMC. We can look at the daily. Again, that's a short trade. And yeah, so if we're looking at the weekly, the MACD, they're almost parallel. And then it's riding on top of that 200-day moving average. It changed directions right now, so it looks like it's beginning to bounce. Again, if we can get a move higher, and if we can get a MACD crossover on the daily, then we can see this move and bounce off of that 200-day moving average. It did bounce right here. It came up, it crossed, and then it bounced on that red candle, and then we got this large white candle right here off that 200-day moving average, and then it came back down, and we could potentially see another large week happening. So again, this is one just to keep on your watch list and keep an eye on it. And then if it crosses your resistance and support lines, then you can go ahead and get in. And again, I would set my resistance right here. I would set my resistance right here first at 10. If it closes above, if it passes 10 and it can get above this 1034, then I will go ahead and start making a move. Let me see. AMC inverted head and shoulders looks like a good entry. Yeah, so you can play the inverted head and shoulders as well. If you wanted to, let me see. It depends on how long you want to get into the trade. So right here, I can draw it out. Let me see. All right, so we have a shoulder right here. And I think I actually have, and we can draw a shoulder right here. Just gonna keep this simple. Then we can come down. We'll come down on that. Then we can come up. I'm just drawing the trends. I'm not really going. Then we're coming up. Wait. All right. There we go. We're coming down. So this is a inverted head and shoulders. So you need two shoulders to form before it bounces out of this pattern. And this pattern is a pattern that's bullish, meaning that if this pattern can be completed, it's going to tell you that stock is moving up. So this is one shoulder right here. It went down, came up, it went down again, came up, it went down again. So again, and it's bouncing, it's creating this right on that 200-day, that 200-week moving average, which I told you before was a pretty strict line. So then we can get a bounce up and it's going to make a shoulder that's similar to this, and then it can bounce out of it. I actually have a picture. This is from Investopedia. If you don't know what a inverted head and shoulders look like, again, shoulder 1, you have a neckline. It came down on the head, and it's not going to be identical. The shoulders don't have to be the same size, but you got a shoulder, you got a head, and you got another shoulder, and then it breaks out at the neckline and pushes up. So when we look at AMC, we got a shoulder, got a head, and it's forming this next shoulder. So that's the inverted head and shoulders that Sean was pointing out. Good eye, Sean. But yeah, so AMC, again, this is one to keep on your watch list and to keep an eye on and see what's going on with it. Let me move on. I'll keep this inverted head and shoulders here. All right, Amazon. Amazon is bouncing off of its 50-day moving average. It sat down on it. It bounced up a little bit, came down, bounced up again, and then now we're moving up. This is potentially making another inverted head and shoulders. Why? Because this can be a shoulder here, and let me annotate. Y'all gonna see a common theme with these head and shoulders. So that's one shoulder, and we can just put it, I'll put it down here. Put it right here. This is, so it's bouncing up and it has resistance at 135. Let me show you right here. So it has resistance at 135, but it also has resistance at 140. If this 200-day moving average keeps coming down, then that is going to meet us right at about 140. So again, I don't know what the stock market is going to open up at tomorrow, but that's only $2 above its current price. So it can open up above 135. If it opened up above 135, then I would watch and just keep an eye on it, because it may pull back and form another shoulder like this before moving higher again. But you also have a resistance right here, and you have one right here. So if it's coming down, pulled up, came down, it pulled up. If it tests this 135 and comes down and make another shoulder, once it comes down and bounce out, then we can have it form the other shoulder that will look like this, and then it can push us up to about 140 to 145. Again, check your other indicators. Let's look at it. The RSI, 53, and it's pointing up. We look at the volume, 3 buying days in a row, and we look at that MACD. It is extremely close. That MACD crossover can happen to the upside tomorrow, or within about, yeah, I would say it could happen tomorrow. It's going to need a big jump to happen tomorrow, but I would say by Wednesday we could have a MACD crossover on that. So that's why I picked Amazon. Again, really quick chart that I paid attention to. Also, what I noticed is that you can make this a cup and handle. So let me do that really quick, and then we can get into the Tesla play. So you can draw your cup. One cup here. And again, if we have a resistance, which is my ceiling right here at 135. So we have a resistance there at 135. It cups up. It can touch 135 and pull down to make a handle. If it pulls down, so if it touches this 135 and it is going to pull down in this direction, it may come back down to about 130. I don't think it's going to be a long handle because it has a lot of upward momentum, and that means that it may be a short handle. So you can look at it in between 130 and 135 to make this small handle. But again, if it makes that small handle and goes up, that's just completing the other shoulder for this inverted head and shoulder. So really bullish stuff. Again, real quick, and this 50-day moving average is coming up. It dropped here, and now it's starting to pick up and come up. So we keep moving up. That 50-day moving average eventually is going to be back on top of this 200-day moving average. So do I have any questions about these before I go ahead and break down this Tesla play? All right, cool. All right, so This is going to be an interesting one. All right. So Tesla right now, I've been playing it. I started playing it last week. It is making the inverted head and shoulders as well. So I'm not going to draw it out just yet. But we have a shoulder right here. It went down. It's coming up. That's a shoulder. It's going down here. It's coming up. And it has resistance right here at 300. We see this at 299.68. And it has resistance at 300. And if it rejects at 300, it's going to pull down and make another small shoulder like this before moving higher to 310. I don't know if it's going to make that shoulder, because if we look at this, it's been a lot. It's 4 days of buying. Yeah. So in the last week, you got majority of the week is just people just buying. Also, this MACD crossover is, I mean, when I bought in on this candle right here. I thought that the MACD crossover was going to happen, but it didn't. But look how close that is. Again, that it can open up. If that MACD crossover happens, this can open up at about 305 to 310. That's if that MACD crossover happens in the pre-market. If it doesn't, I mean, I won't say I'm 100% sure, but I'm about 60 to 75% sure that this MACD is going to cross over. I've already bought calls. I bought calls on Friday for the upper 310 level for this MACD crossover. Again, when we talked about it last week, the RSI was at about 52 pointing up. Right now it's at 59.50 pointing up. And again, if we get a rejection, that's going to bring that MACD back down to around the 55 range, which would be another good point to get in at. So this is what I noticed at first, and I said, okay, let me pull out and look at the weekly. So once I backed out and I looked at the weekly, I see it's at 54. So 54 is still within my strike zone. But now, even on the weekly, it is making a cup and handle. And it's already pulled down on the little handle here. And it's already pulling back up. The 50-day moving average is at 298.43. So we're above that 50-day moving average. And again, we can bounce off of that 50-day moving average and keep moving up. But while looking at this, this is the weekly. So if this weekly cup and handle plays out, that can push us to about 350 to 375. The trend for the MACD is already up. And then we have a week of buying after a couple of weeks of selling. And then we had a choppy, pretty much back and forth. This is the bottom of the cup. So it's trading sideways pretty much. And then we had a upswing after the handle. So if you can't see the cup and handle, and let me annotate it first, and then I'll show you an actual picture of one. So the cup, you can start the cup either at 325, but I would like to start my cup up here. Go down and you pull up. All right. So you got a cup and you got a little handle here. And then it's bouncing, it's already bouncing out right there. So again, if it can get above that 50-week, because we're looking at the weekly 50-week moving average, then we could see it move up to 325. We could see 325 this week, and I'll tell you why in just a second. If it goes really crazy, we could see 350, but I doubt we'll see 375 this week or next week. It may take a few weeks for this to happen. But this is a really bullish sign for the stock. And then, like Mark showed you, all those other stocks that are having MACD crossovers and that are forming bullish patterns, I think that the market is starting to move in a different direction because of inflation. So let me show you this cup and handle first, and I'll break down what I mean. This is a cup and handle. So again, you see the bottom, you see the little pull down, then it's a bounce out after it crosses that neckline at the top. And what I'll do for y'all is put this in the chat. Hold on. So you need to review cup and handles. You can go check it out. All right. So again, this is making a cup and a handle on the weekly. So again, don't confuse this cup and handle with the cup and handle on the daily. This cup and handle right here, again, it can push Tesla up to about 350 to 375. But this is going to take some time. Remember, each candle represents a week. So the next candle that's forming, it can move up to 325 to 350. But before we get to 375 or in the 400 range, again, it may take a few weeks, 2 or 3 weeks. All right. Why am I so convinced that this is going to happen? Well, let me pull up the calendar. Where's the calendar? All right. So this is the economic calendar for the week for major reports. So tomorrow we don't have anything, but on Tuesday we do have the CPI coming out. I've done quite a bit of research on the CPI, and they're saying that the CPI should come in with good numbers because of energy prices. Energy prices is a large factor when it comes to tabulating the CPI. And from what I've researched, energy has dropped as far as prices. So if we look at gas at one point was at about a little bit over $5 on average. Right now, gas is about $3.75 on average across the sectors. So with that pullback in energy prices, that's a good sign for inflation pulling back as well, because when the energy prices were high, inflation was peaking at about a little bit over 9%. The last time that the consumer price index came out, inflation, it looks like inflation had peaked because it came down from about 9.1% down to about 8.5%. So even if the consumer price index comes in and is flat at 8.5% again, that's still a good sign, because that means that it's starting to level out, and then we should be moving down. Now, if it comes in even lower than that, then we could see a giant rally in the market. Even if it comes in flat, we could see a rally in the market. The reason why we could see a rally in the market with this consumer price index coming in is because the consumer price index is another tool that the Fed, aka Jerome Powell and his buddies, use to gauge how big of an interest rate increase they will want to do. Right now, for the last, I want to say 2 months, they did a 0.75, which was some of the largest in history. And they're looking at doing another 0.75. But if this CPI data on Tuesday comes in at a decent level, then investors are looking like, okay, maybe they'll consider a 0.5, or maybe even if they do a 0.75 this time, we can get some future speculation on what they will do the next time, which could possibly be a 0.5 at that point if inflation is tabled off. So again, I have high hopes for this CPI. I think that the CPI, again, is heavily based off energy prices, and the price of gas has come down about 25%. So this CPI on Tuesday should come in at a decent number, and it's coming in before the market opens. So that's another thing to keep your eye on. But back to Tesla's chart, the CPI data comes in at a good price. We're pushing Tesla up, and again, Tesla on the daily, this crossover is probably happening tomorrow. It's so close. I thought it was going to happen Friday, but again, people are buying. That's 4 days of buying. People are buying up. And again, I think that Monday, high volume day, is probably going to be another crossover to the upside. So that's one part of my research. All right. Do I have any questions about the CPI data or this economic? Matter of fact, let me give you this calendar link. All right, the calendar link is in the chat. All right, no questions about the CPI data. Okay, another thing, Tesla has the FSD beta that just came out over the weekend, which a lot of Tesla owners has been waiting on for a while. So this coming out is good news for Tesla stock. That's just, the sprinkles on top. That's why I added this one in. But it just talks about the beta and the things they're adding. So from what I've read, it increases, it decreases the error in lane presence by 44%, which is big because people like using the full self-driving software. That's what FSD stands for, full self-driving. And so they continue to upgrade the full self-driving. But again, this is just a beta coming out this weekend. Good news, right? All right. The reason why, again, I'm convinced for a longer trade on the weekly, if we're looking at the weekly again, let's look at this cup and handle on the weekly. The cup and handle on the weekly, again, it may take a couple of weeks to play out, but we need upward momentum. So Tesla sold about 77,000 Chinese-made EVs in August, which is triple the number that they did. Let me find the percentage. Where is it at? Where is it at? Can't find. It's 173%. I want to say. I can't find it, but I'm not gonna spend too much time trying to find it. But Tesla sold year over year. The vehicles that it sold was at 100 and matter of fact, let me pull this back up. It was at 177%. So I'm sorry, 173%. So the thing is, this is with all of the shutdowns starting to ease. So once we move into September, where we still have shutdowns, but Tesla is moving at a faster pace. Tesla may be able to top these numbers in September as well. The thing about it is that Tesla reports the vehicle sales before their earnings. So they report all vehicle and delivery sales on the 2nd of each quarter. How do I know this? Again, I'm showing you all how to do research. I know this because I went to Tesla's website and I went to their, where is it at? Menu. I went to their investor relations and I said, okay, when does Tesla have events or earnings? Or again, you see other events that have the 3-to-1 stock split. AI, this was their stock split from 2020. So there's a lot of information on their website. So I said, okay, let me be sure about my production and delivery, because I said, okay, from what I know, again, this is in January when I turned 600 to 20K, it was because I went to their website, I checked production and deliveries, and I saw this. When I clicked on it, I said, okay, what day is this coming out? July the 2nd. All right. So I said, okay, cool. That's for one. Does it come out on the 2nd every time? I said, okay, let me check the next one. April 2nd. I said, okay, cool. It's 2 in a row. Check the next one. January 2nd. So you can see the trend. This is coming out. If we look at the one for October 2nd. All right. I'm showing you this to say, again, we need a few more weeks on this. We're already at, today is 9/11, and we're already about 3 weeks away from the report coming out on the 3rd. And Tesla sees a lot of action on the 2nd of these quarters. So the fact that Tesla just tripled its production for the month of August year over year, and again, it may be even better in September. These numbers are going to come out on October 2nd, and they're probably going to be good. The dangerous thing is this. People know, again, people have read these reports. Once you see that Tesla tripled its production from China year over year, people already know to start buying in. As soon as that report came out, again, the report came out this week. So you see a lot of buying happening, and people are probably going to continue to buy, because they're like, hey, if Tesla tripled its production when earnings come, and they have earnings on I want to say October 19th. Once they have earnings, then Tesla's probably going to beat its earnings. I don't see how you can triple production unless the month of September. Question, Isaac?
Yeah, no, I didn't mean to interrupt. But I did want to say, I think a big part of that tripling production is when they close down those factories in Shanghai, they revamped to their factory to make it more efficient.
Yep.
And I was reading about that, and I wonder if that, because Shanghai, they put out a grip of cars. I wonder if that's got a lot to do with their production going up.
Yeah, I definitely think that's a possibility. That's why I say for the month of September, the lockdowns aren't as bad, and they already have their machines up and running. So I think that September is going to be a big month for them, and we'll find out on the 2nd of October once that comes out, and that's before earnings. So good point, Isaac. But yeah, again, this is a longer play that I'm setting up. Again, you can play this one week to week. I'm planning on, for instance, I bought I have a 313 call that expires this week, but I bought it on Friday. I specifically bought it for this crossover. Once this crossover happens, I'm going to go ahead and get out, and then I'm going to buy a longer call. I'm thinking about a October 14th. October 14th to play on the 2nd. So again, these reports come out on the 2nd of the month. I'm thinking about an October 14th. And if we can get an October 14th, that gives this cup and handle to play out. And that also gives Tesla time to keep making vehicles. So I think that we'll start to get more and more news as we get closer. And again, with the CPI coming out on Tuesday, I want to say, yeah, Tuesday, I think the CPI could give this another bump on top of that. Now, another thing that we got to watch for is on Thursday, we have the initial jobless claims, which sometimes affect the market. Lately, it hasn't really been affecting the market. People are more worried about inflation and the CPI. So this is one that may create a dip, but this is just something to watch and keep on your radar for September 15th, the initial jobless claims. Also, on top of all of this, I told you I was doing research. This week is a quad witching week. What does that mean? Bring this over here for you. So quad witching, these are the quad witching days for 2022. You got the 18th of March, 17th of June, 16th of September, which is this Friday, and then the 16th of December. What happens on quad witching? So you basically have options for stocks and stock index futures and their partner contracts ending all on the same day. It doesn't mean that the stock market is going to drop or crash or that it's going to go up. It's just a guarantee that there's going to be a lot of volatility in the market. That volatility could be a swing up or a swing down, or it could be a swing down and then it just comes back to middle in the market close. So quad witching is something I think I mentioned maybe 2 months ago or a month ago to keep your eye on. Something good though about quad witching is that the week of quad witching normally is bullish, and then the last day of the week is the day that you have to keep an eye out on. So from what we're looking at, again, Mark charted some stocks. We looked at Tesla, we looked at the SPY. Everything is looking like it's going to move up, which falls in line with the quad witching week, which is a bullish week, and then on Friday we have a pullback. So this is a lot of information about quad witching. How does it impact trading, futures trading, so on and so forth. I'm going to give you this as well. Again, I did a lot of research. This is what I did last time with the Tesla trade. I was just digging in the weeds, just finding anything, connecting the dots and making it work, and it worked out for me. But yeah, so that's something to keep your eye out for. All right. So again, Tesla's making this cup and handle. It's pulling down, it's bouncing. And again, with all of the other positive things that are happening, we just have to be careful at the resistance points. So the first resistance point that we got to take out is 300. The next one is 310 on the daily. So you're going to have to get used to using both of those charts in combination. Again, but this is it's forming a really nice either cup and handle or inverted head and shoulders. Both of them are bullish. And again, that MACD crossover, I think that's going to happen for sure. Something to if it'll help you sleep. Check Bitcoin. If Bitcoin is up, which Bitcoin closed Friday, well, at the close of the market, Bitcoin was at, I think, 21,200, somewhere in that range. Bitcoin right now, let me see, 2 seconds. Bitcoin is moving up. So it's at almost 21,800. Bitcoin is at. So anytime Bitcoin opens up high, when the market is closed, opens up high, is moving high when the market is closed, the SPY and tech stock that are related to Bitcoin or have conversation around Bitcoin normally are up as well. Again, I mean, you just need a hair of a strength just to push this to make this MACD crossover happen. And I think the fact that Bitcoin being up right now is going to be what's going to make this MACD crossover happen. The action for this one, for me, I'm letting it close. Again, if we draw since we're talking about support and resistance lines, if we draw a resistance at 300, I am not getting in. I'm not getting in at 300. I need it to close at 300 or lock in above 300. And then I'm looking to get in at about 302 to 303. At 302 to 303, I'm looking to ride it up to about 310. 310. Then I'm going to be pulling back out and looking at the weekly, because again, I want to see how far along we are with this cup and handle, because I'm going to keep playing this. So every Sunday, I'm probably going to talk about this until earnings. So Tesla will be added in somewhere to just track the progress. And actually, we'll be tracking in the Discord. I forgot next Sunday is my birthday, so we won't be having a session next week, but we'll be tracking it in the Discord. So again, it's a lot of positive information and news around Tesla. Tesla's forming a really nice cup and handle, and it's also forming a inverted head and shoulders here. Everything is lining up, is looking really nice, and I'm already in calls. So I'm just waiting on CPI to come out on Tuesday. Tomorrow, I think we're going to have a green day. Again, Bitcoin is up by a large amount. I don't see it going down before the market opens. And then the SPY is about to move up as well from what it looks like, because it's in between that 400 and 410, but it's moving up towards 410 by being at 406. So I'm just going to watch futures and keep my eye on this. But this Tesla trade may be another big one if you know where to get in and where to get out. And so I'll be posting that in the Discord. We can talk about it, and I'll let you know my trades. Do I have any questions about any of this research or anything that's related to this Tesla trade? I know I covered a lot. Isaac?
Would you buy, like, let's say you wanted to put, some money in the Tesla, $1,000, something like that. Would you buy, just try to buy a really good call? Would you buy multiple calls? Like, how would you play it?
Honestly, I'm just two-stepping it. So a two-step is when you buy in, and you buy in at the end of a day, and then you sell at the beginning of the day.
Okay.
So for instance, I bought a 313 call, and I kept some money to the side. So that's not like all of my trading capital. I kept some to the side just in case. Again, if we can, I'll hold on to that 313. If we can tap about 302 to 303, then I'll put the rest of my trade capital that I designated for the trade in, and then we can move up. So that way you're not going to miss any overnight action, because most of the time when you have a large jump, a lot of them happen after hours where you can't touch it with an option. You have to already be in it. So I'm just making sure that I at least keep a decent option in it, but I'm taking my larger option contract that I'm spending more money on out every other day, just to stagger it. And then once I cash out those trades, then I'll buy a 350 call for let's say October 14th, again, because I want to play that October 2nd report. So again, we'll talk about it, because as the market fluctuates and moves around and things happen, the strategy may have to be adjusted. But I think overall Tesla is going up, and I think that we should see it anywhere between 325 to 350 within the next month or two. So that's why I'm keeping my eye on it. I've done a lot of research. Once we get off this call, I'm going to do even more research, but this is definitely one that you're going to keep an eye on. It's a lot of news around it too, so it's easy to track.
Right.
Did that answer your question?
Yeah.
Okay, cool. All right. Do we have any other questions about this Tesla trade? All right, cool. So let me stop presenting. And if anyone needs to see the Discord, I can do a demo of the Discord if you want to hang around. If not, I appreciate y'all, and I will see y'all not the Sunday coming up, but the Sunday after that. And if you're in the Discord, I'll still be in the Discord every day. But again, thank you all. And again, if you need a demo, I will stick around afterwards, and we can make it happen.